Do you think that electric cars have a bright future for environmentally friendly transportation? Then you should watch this video. In spite of recent disappointments and a decline in the stock market, a well-known Tesla analyst and stakeholder is upbeat about the company's future. This attitude is shared by a large number of Tesla stockholders who believe that tech entrepreneur Elon Musk has the power to permanently change transportation and sustainability. Come along as we discuss James Stevenson's observations and the reasons he believes Tesla's stock will rise. Fasten your seatbelts and get ready to be amazed by the EV industry's enormous growth and profit potential. Please hit the like and subscribe buttons before we go there. Why do you think the price of Tesla shares will soar? There are still a lot of bulls in Tesla, even if the stock has fluctuated greatly over the past year. This should not be missed by everyone who is still excited about the future of the leading electric vehicle manufacturer in the market. James Stevenson, a well-known Tesla analyst and stockholder who is also active on Twitter, wrote a lengthy thread on January 16th expressing his optimistic prognosis for Tesla in 2023. According to Stevenson, those who are skeptical may believe that Tesla's recent significant price reductions will make it impossible for the business to enhance its profits in 2023. Even though I hate to admit it, 2023 earnings and reported deliveries are still being received. He then sent out a series of tweets in response to the Twitter discussion, outlining his perspective and including charts. Although Tesla slowed down its speed of delivery in Q3 and Q4, which caused deliveries to fall short of analyst estimates, the recent price reductions ensure that Tesla deliveries will continue to break quarterly records. According to Stevenson, the Tesla Model 3 and Model Y are the best-selling luxury cars in the world. Sales of the former are increasing, though not as quickly as those of the latter, he adds, and by the end of 2022, the company's two recently opened factories will be producing more than 3,000 vehicles per week. The Austin and Berlin factories have significantly expanded production since they started operating at full capacity in the middle of 2022 through 2023, according to a graphic Stevenson shared in a follow-up tweet that included production and delivery data connected to the chart shown above. Stevenson predicted that production will exceed deliveries as long as transportation and inventory levels stay high and the average cost per delivered car rises. Analysts for Tesla believe that when it comes to profitability, investors should focus mostly on profit growth. Elon Musk, the CEO of Tesla, stated during a conference that eligible vehicles might receive access to the company's fully autonomous driving technology by the end of 2023. According to Martin Vicha, head of investor relations at Tesla, the business is on schedule to deliver supervised FSD in line with Musk's anticipated timeline. According to my prediction, Tesla will increase profits over the coming years by convincing enough consumers to pay a premium for fully autonomous vehicles in the near future. As far as Vicha is concerned, supervised autonomy, which retains the driver's essential role in the car's mobility, but with far less intervention, is simply another term for supervised FSD. Regardless of when the end of the year approaches and Tesla releases its fully autonomous driving technology to the general public, drivers will still need to exercise caution and follow safe driving practices. Similar to those who abuse their advanced driver assistance systems while participating in the FSD beta program, Vicha stated that FSD users who abuse the service while driving will not be allowed to use it at all. We firmly believe that Tesla will keep refining its autonomous technology as it collects more data through interventions. In other words, the company will gain valuable insights from drivers who actively correct fully autonomous driving maneuvers. We are taking this road because we think that the issue of universal autonomy can only be resolved by large-scale data collection and artificial intelligence. When the new factory ramps up in 2023 and incentives start to kick in, I predict Tesla Energy will experience significant revenue growth for Megapack XL. In spite of economic uncertainty, Vicha stated in a different chart in the aforementioned Stevenson Twitter thread that the Tesla Energy Company has made notable progress in 2022. Each device can store more than 3 megawatt-hours of energy, which is sufficient to power 3,600 households on average for an hour, according to information from Tesla's Q3 earnings call in October. Stevenson expects the Tesla Megapack, which safely and dependably stores electricity for the grid, will generate a sizable increase in revenue. This eliminates the need for gas peaker plants and helps prevent outages. Tesla's CEO, Elon Musk, recently said that the business anticipates a 150 to 200% annual growth in stationary energy storage, which is far faster than the vehicle industry. The energy division of Tesla, known as Tesla Energy, is an expert in installing solar panels, solar roofs, and stationary energy storage systems like megapacks and Powerwalls. The company reported in its shareholder letter that the deployment of energy storage reached a new quarterly high of 2.1 gigawatt hours last quarter. According to Tesla, Q3 saw a 62% year-over-year rise in energy storage deployments, reaching a record-breaking 2.1 gigawatt hours. This gain was achieved in spite of the fact that their energy sector continues to be more affected by semiconductor problems than their automotive business, and in spite of the fact that demand for their storage goods continues to exceed their supply. According to Stevenson, Tesla's calculated price reductions will impede the growth of earnings per delivery in 2023, but overall earnings would increase as a result of higher deliveries. He also disclosed the reason why there isn't a greater decline in earnings per delivery. The plants in Austin and Berlin are scaling up, resulting in lower costs per delivery. Fremont, which is contributing fewer and fewer vehicles to the global mix, has the highest cost per vehicle. It gets harder to deliver every vehicle before the end of each quarter the more vehicles you produce each week. Stevenson also included a chart showing how Tesla's quarterly finished goods inventory would be affected by the wave's collapse. Despite a decline in sales per vehicle in 2021 and 2022, Tesla's automotive gross margin experienced an improvement, exclusive of regulatory credits. As Stevenson pointed out, he projects that revenue will increase until 2023, even if Q4 would see a decline. The Tesla analyst provided a more thorough graphic that demonstrated the growth of Tesla's sales over time. Q4 revenue reached a record high of nearly $25 billion, surpassing that of the entire year 2019. He noted that while some Tesla supporters argue that the company's operating expense figures are overblown due to a lack of increase, this is primarily due to the CEO's stock compensation. He said in a subsequent tweet that Elon Musk's 2012 stock compensation exercise resulted in a $340 million extra payroll tax in the fourth quarter of 2021. More visuals that show Stevenson's prediction in a more thorough set of depictions of Tesla's deliveries, revenues, and earnings are included in his Twitter thread. Several analysts firmly believe that Tesla stock is the best investment for 2023, following its worst ever year. Benjamin Callaway, an equity researcher, lowered his $316 target price for Tesla stock to $252. Subsequently, Callow positioned Tesla as the leading idea stock for 2023, but not before 6 analysts cut their price predictions. Analysts' buy and outperform ratings for Tesla stock have persisted in spite of this, and their targets are still significantly higher than the stock's current price. According to Callow, investors shouldn't be overly concerned about weak demand in the first part of 2023. The expert claims that Tesla has several options to increase consumer demand for its goods. Accelerated bonuses and rental agreements are one thing. The greatest company to benefit from the increasing market share of electric vehicles is Tesla. Dan Ives, a Wedbush analyst, has long been a staunch advocate of Tesla shares, and MarketBard has now joined Ives in his optimism for the electric vehicle giant. According to analysts, Tesla investors are suffering as a result of Elon Musk's usage of Twitter to express political opinions and interact with individuals from diverse backgrounds. Bull for Tesla Ives has expressed his dissatisfaction with Musk's Twitter antics on multiple occasions, characterizing them as a soap opera and a disaster that is harming both Musk and Tesla's reputations. Ives kept his outperform rating on Tesla shares last week, but he cut his price objective from $250 to $175. Although it would